Okay, again, just to regroup everyone, welcome to the E-commerce Entrepreneur Summit. So this is actually our second edition already. The second part of our series for 2021. We've been doing the E-commerce Entrepreneur Summit since 2007, and we're very glad that we've been able to continue with this tradition through the years. And at this point of our presentation, we just had a presentation earlier from Ellen Joy Sufficiencia about building better systems for financial inclusion. Now, at this point, we're going to move on to our next topic. And this next topic will be equally interesting as well, as we will talk about implementing agency banking led strategies for financial inclusion. And our speaker is Ronald Webb, who is a 30-year veteran on the payments industry in Africa, currently heading the Digital Financial Services Consulting Limited and providing consulting services to banks, mobile money operators, and fintechs. Previously, Ronald was Director of Financial Services of Safaricom, heading M-Pesa Kenya, where he led the introduction of the M-Pesa One-Tap contactless payment product and the free low-value M-Pesa Kadogo tariff, which increased affordability to millions of users. Ron was also Director of Payments for Equity Bank, where he helped launch the Equity Easy Pay product, American Express, and other card associations issuing and acquiring projects. Co-founder and chief architect of the PayNet and payments businesses in Zimbabwe and Kenya, Ronald is able to transition the boundary between technology and business. Ronald continues to wrestle with the challenges of financial inclusion, helping organizations remain at the forefront of innovative, relevant, and affordable products and services. New digital products and services are not a choice, but a vital requirement in achieving this goal. So let's now welcome our resource person, Mr. Ronald Webb, for his quick presentation on this topic. Go ahead, Ronald.
Thank you, Janet, and hello to all the attendees, and thank you for your time. Just a quick check that you can hear me all right. Is my audio
Yes,
okay?
we can hear you loud and
Excellent.
clear.
All right, I've got a very short 15 minutes to take you through agency banking. And the agent model for servicing customers is an extremely well-proven model. I will go through some of the statistics from East Africa showing the tremendous impact that it has had on financial inclusion a little later in the presentation. But when working through this model, I like to use the acronym AIR, AIR, and the A for access is perhaps the most important feature of agent networks in that it closes the geographical and physical barriers that customers face accessing financial services. In the East African market, there have been banking services available at free or very low cost for considerable time. But the cost of accessing those services, getting to where the nearest bank branch is or accessing the nearest ATM, has just been too costly for poor folk. And the research done by MIT and Georgetown University showed the tremendous importance of that close proximity of touch points, access points to financial services and customers. The I is financial inclusion. And that, as I've just mentioned, is how we get these services to people at a very low cost. Reach is how we remove those psychological and perceptive barriers to getting access to those financial services. AIR, agency banking, the most affordable and acceptable way to get services out into the hands of tens of millions of customers. There are clear benefits to all stakeholders. The customer, we've mentioned convenience, we've mentioned cost, but it also is quite often cultural. There were many customers in Kenya particularly who felt uncomfortable going into a bank branch. And one of the lessons we learned early on with Equity Bank was that the way that you design and build these access points is critical to how people feel they can engage with them. And in one instance, I saw an example where a very bright and shiny, very modern looking bank branch was next to one of our equity branches, which in comparison are much more humble affairs. Dirty floors in some instances, much cheaper fittings internally, but queues and queues of people prepared to enter that location rather than the other. And the reason was that, agricultural workers and the like coming off the land felt that they couldn't access, they shouldn't go into that bright, clean, shiny place, but felt much more comfortable going into the location we chose. And in an agent network, the agents are much more able to resonate with that local user base and quite frequently have a relationship in some way with the folk. They know the local people, and you're able to get past those barriers. For agents, new revenue streams, and there's more and more revenue streams that have rolled out to agents beyond just simple cash in and cash out, and we can talk about that shortly. They get increased footfall, so they also sell additional product and service. They benefit from being affiliated with the brand, the successful brand, particularly in Kenya, of M-Pesa. And they get access to training and better business systems to better manage their cash, access to insurance, security, how to manage people, and so on. For banks, hugely reduced costs, much cheaper to service customers through an agent network, and therefore that results in better profitability, faster growth, both of their user base, mobilizing deposits, increasing float gain, and generally doing much better on both a financial and service level. From a regulator point of view, it ticks all the boxes. The Brookings Institute report has Kenya at the highest level of financial inclusion globally, at just over 78% of folk having access to an account, a wallet, a bank account. And this has been a tremendous success in uplifting folk out of poverty. A research paper produced by MIT and the Georgetown University and operated over 6 years showed that these services had lifted just over 2% of Kenyan families out of poverty. And the impact was greater on female-led, woman-led families. And that was simply the easier access to cash services and the ability to transact digitally. We know that of the volume of transactions in our markets in East Africa, between 2012 and 2019, we've only shifted about 4 or 5% of all transactions to digital. This most recent year and a half is going to be very interesting to look at the numbers because COVID has had a definite impact on the reduction of cash and the increase of digital values. But cash is king. And while cash is king, the on-ramps and off-ramps of any digital money service, any e-money service are critical. How do folk get money into a wallet or into a bank account? And how do folk get money out? And again, the agent network is a critical service in allowing that. It is fundamental in providing access to those digital value stores, bank accounts, and wallets. Research that we ran also showed that low value transactions dominate, right? Our research showed that just over 48% of transactions were below $5 and a significant number were below $2. And here you can see the graph showing that a tremendous number of very low value transactions occurring, and making sure that you have the services to mop up those transactions to provide service to customers at those transaction points is critical. And the only way people can do that is if they've got easy, convenient access to getting cash into their wallet or bank account and being able to then transact with it. In East Africa now, Equity Bank, running on the Modfin platform, has just over 72,000 agents servicing customers. M-Pesa has just over 250,000, 260,000 odd agents, and some 302,000 merchants doing merchant payments. So providing the ability for people to get cash in and out of their account, but also providing the services to allow people to pay for goods and services have been critical in the solving of these problems. I'm doing work in Southeast Asia at the moment, in a country where over-the-counter services have been the norm for agency services. And in these services, the customers don't need to have an account or a wallet. They're able to just move money through a proxy store, a proxy wallet effectively, from one party to another. And research done by Ignacio Mas, originally with the Gates Foundation, and now running independently, and others, CGAP have been involved in this, have shown how the problem with over-the-counter only services is that you have a very short-term and ephemeral relationship with the customers. And it is extremely difficult then to sell or provide additional services to those customers. If I just walk into an agent, put cash over the counter and tell the agent, please send this money to this mobile number, and the money gets transferred, I walk away, there's no ability for me to do anything else. I don't have an account. I don't have the ability to do digital transactions myself. I'm linked and coupled only to being able to do that through the agent network. Now that, quite arguably, is pretty quick to roll out, and it doesn't involve KYC and registering customers, but it does limit those customers and restrict them to a very infrequently used service. Our research and our experience from a number of emerging markets shows that the daily relevance, how relevant your products are to customers on a daily basis, is a critical factor in how successful customers can be uplifted because of financial inclusion and given access to better services. Sending money is something that happens infrequently. A wage earner will send money once a month if he's paid monthly, at best once a week. Whereas research done by the Gates Foundation shows that the poor are doing many more times payment transactions than wealthier folk. Research in Kenya, again, showed that the poor do 16 payments a day on average. And that's because their income and expenditure cycle is that much faster than wealthier folk. Folk who are earning a decent amount of money can afford to go out and buy groceries once a week, perhaps even once a month. Whereas poor folk live hand to mouth. You know, they are relying on the income that they've earned doing whatever they do. That we call it hustling in Africa. You know, they hustle, earns them a bit of money in the morning, and then they will buy just enough food for the midday meal. And they'll hustle again in the afternoon and go out and buy the components for the evening meal. You know, that will be a can of charcoal, a bunch of spinach, some maize meal to make the staple maize porridge that people live on primarily in East Africa. And 16 transactions a day are what they do, largely in cash. In the beginning, Janet mentioned the Kidogo tariff. Kidogo in Swahili means tiny. And so we launched a tariff that was affordable for folk. Basically, we removed fees for transactions below $2. So people could transact for free. There was no cost. And that exploded transactions. Many more of those 16 payments a day could now happen out of their account, out of their wallet, and gave them even more convenience. And many more services then overlaid on top of that. And all of this has the effect of uplifting customers beyond just that ability to walk in, hand cash across the counter, over the counter, and do a single transaction or remittance. So my advice as banks are building out their agent networks is really to go for value stores, accounts, rather than just ephemeral over-the-counter remittances. Key success factors to agent networks. We've already mentioned proximity. Proximity is a key driver, and there are excellent academic papers on just how important that is. They've measured it down to how much use you get for each distance, from 0 to 1 kilometer, 1 to 2 kilometers, 2 to 5 kilometers. And you see the fall off immediately in usage. Revenue, making sure that your commission structure keeps the agent motivated and focused, and providing him with multiple revenue streams with different services and products that you can pass through that agent network are key. We learned the hard way that agent support is super important. When an agent has trouble with his account and his service, and he will, every service does, you need to have very quick, efficient, easy to access services, help desks, etc., that the agent can get support, that he doesn't need to sit on a telephone queue for hours. And at M-Pesa, in an early part of our growth, agents were having to call up around midnight to try and get through to the help desks because we just didn't have enough seats. We didn't have special lines for them to contact, and also have well-documented and very clear dispute resolution processes. Make sure that your systems work. Certainty is a critical success factor for both agents and customers. If transactions fail every now and then, people lose confidence in the service and stop using it. Cash never fails. You can get it stolen, but it always works. Digital services have to be as reliable. Confidence grows usage. Make sure that you have liquidity management services in place, either through aggregation, short-term lending, to make sure that your agents have enough cash on hand to service customers. Because without enough cash on hand, you break that certainty rule. It means that customers will go to one agent to try and do either a deposit or a withdrawal, and he'll say, sorry, I've got no cash, or I've got too much cash, which I haven't deposited and I can't take any more. Make sure that you've got management around controlling that cash and the liquidity management. And then, as we mentioned just a short while ago, make sure that your pricing suits your market. Look at the spread of transaction types and make sure pricing is not a barrier to access to services. So thank you. A very short presentation on a very detailed subject. So I'll hand back to Janet at this point. Thank you very much for your time.
Thank you very much, Ronald. So at this point, let's now move on to your co-panelists who will also be presenting. So may I invite Mr. Romel Aceron to start showing his screen as I introduce him properly at this part of his talk. Romel, thank you so much for joining us today. So our speaker, Mr. Romel Aceron, has 23 professional working years in the banking solutions industry from the fintech's vendor side. He has been involved in various banking technology initiatives in retail, SME, and corporate space in Philippines and across APAC over the years. Currently, Romel is the global head for business solutions and country head for the Philippines for Modfin, and continuing the digital engagement with clients who wanted to transform their businesses and be leaders in the digital space. So, Romel, I'm now turning over the presentation to you. Please go ahead.
Thank you very much, Janet. So again, good afternoon to everyone. So I hope the rain will not affect as well my signal. It's really raining hard here in Taguig right now. So it's a pleasure for us to be invited in your group and share our experiences and our solutions and the way we did things for agent banking in terms of the African market. So it's really good to hear Ronald always share about all those things in the business perspective, the challenges that they had faced when they did it in Equity Bank, and being the solution provider for them also give us pride and prejudice that we were able to really do it in a very tough market. As we always say when we start our discussion against digitalization and pertaining to agent banking, we all know that this topic can span to different topics, even especially it's about financial inclusion. But I'll try to manage my presentation today just to focus on agent banking and put some specifics on what Ronald have said on how it was done, and then how on the solution side of things we made it possible for them for Equity Bank. So later on, I'll also give a quick intro of what we are and what we have done in the region of Africa, Middle East, and now we're starting it in Asia as well. So for us, for Modfin, agent banking is not just about the agent banking. As you can see here, I have the merchant. That's just one part of the strategy that you can put in place in terms of, or on top of the traditional ways of what we do things. So we cannot discount the fact that to be able to cover the financial inclusion, of course, the strong foundation for the branches, the strong ATM network that you have, the coverage that you can really give to the people, and then without denying the fact that the move now to internet banking, mobile banking is really giving us attraction, especially during the pandemic. But they have also realized that agent banking is also another medium that can really serve our people and then reach out and do the mandate as well of BSP and even ADB and even World Bank in addressing financial inclusion. So for today, let me give you a quick run through of what we have done, how we have helped the likes of Equity Bank and 30 more banks in Africa. Yes, we have around 60 plus clients already in Africa, and 30 and 50% of them, which is around 30 in numbers, are using our solution in terms of agent banking. So every time we start this one, we always come to the perspective of, is there really a need? I strongly believe that Ronald have already established that one. The need is still there, especially the pandemic days, the last 2 years. People or banks and institutions that were still dwelling on how they're going to implement agency banking, or are we really going to do this, or are still having thought on doing digitalization, actually they suddenly realized that if they were only able to do it when the time and provisions was there and given already by BSP, they should have been now in the same courage that we are in, for those people and groups that are really enjoying the growth in terms of servicing our people. No, so for the world market, yes, we are saying that 30% remains to be unbanked. Now let's go down to the Philippine market. So it's the reverse. So in the Philippine market, we have only around 34 adults Filipinos that are still having the formal accounts, and then we are still behind the curve in terms of our neighbors in Asia. Like Indonesia is already 49%, Thailand is already at 18%, even Malaysia. And actually, if you go to the likes of Vietnam, you can buy in a small store, or even let's say the likes of Magtataho, you can buy a taho using a QR code. So these challenges that they have in terms of the same challenges that happened in Africa 2 decades ago, in terms of the challenges in the telecoms infrastructure, was the same thing that we are also facing. But we were facing that about 2 decades ago, because in the Philippines we have already started doing this digital thing as early as 2001. We were able to do financial transactions, payments through mobile phones, but not the same as how we do it now. But we know the concept, we know how to do it, and we were doing it. So it's just that, as rightfully said by Ronald, there will be some cultural challenges, and especially us in the Philippines. So we have this thing that we wait and see. Let's wait and see what will happen. Then that's the only time we go to the bandwagon, when everything's already working. So kudos to those banks, the like of the banks of Sarlito, and then the Land Bank, of course, and then the other banks that are really having the courage to do the extra mile of doing the mandate of BSP, the World Bank, and ADB in the financial inclusion. And agent banking, we're not saying this is the ultimate one, but this will be another medium or another way for us to reach them, no, to reach the people in the world. Because right now, we may say, we are in the metro, we are in the city and town, it doesn't really resonate that much. But come to think of it, if you go to the statistics, only around 45% are here in the towns or have access to towns, and still around 55% are still in the rural places. So challenges, 7,600 islands, come on. There will be really a tough challenge for us. But again, through this kind of options that the BSP is trying to lay out, actually, this is where both financial institutions, non-financial institutions, even us vendor, are really happy to see. Because when we are doing the discussions in the banks in the early 2000s, they will always say, oh, Mel, there is a roadblock. BSP doesn't allow us to do this. There will be some networks are not there, facilities are not there. The mediums are not accepted. But right now, we have the right foundation. BSP is really supporting us in doing so. And we have seen already, even non-financial institutions capitalizing on the likes of wallet or e-money. That simplifies things. So it really simplifies things, because we know, we all believe that of course, the risk and mitigations will have to be there. BSP will need to play the balance, so therefore they can stretch a bit, but they have to be stringent on some things. But having the capability to have the access to e-money, now augment it with the things that we already have, the likes of cash agents, Circular 940, the likes of course, Personet and InstaPay are really one of the things that in other countries, they still don't have something like that. So it's a bigger challenge for them. For now, we have mediums. Might not be the real time that we would like to, but it's almost like real time. When I'm living in the south in Taguig, every time I go up to Skyway, sometimes I forget to load my balance there. But imagine 5 meters away from the toll, I can already load my auto sweep RFID because of the facilities that we have already. So therefore, we have the road to go to do this one. Now we just need to have the vehicle and the experiences. And it's a good thing that there are countries and regions like Africa that been doing this for the past 2 decades. We can take from those experiences so that we will not be reinventing the wheel. It's more on really adapting to what is applicable to our country. So every time I'm in front of the clients, what one thing I always tell them is that there's no one thing that fits all. So what we have done is actually we created a solution that will adapt to the different regions. So therefore, do you want a network of agents that are working within a wallet? Fine. Or working with a national wallet, or working with a third-party wallet? Fine, we can do that. Or working with your current core banking system or whatever you have in the bank? Yes, we can do that. And in our experiences in Africa, we have done all those possible combinations, and it can work. It's just a matter of we have to fine-tune what offerings do you want to do. So we know the end goal of this one is to really have the Filipino people to have their own accounts and be able to be included in the complete ecosystem. But you cannot easily go there. So yes, the end goal is to acquire the customer. But as we know, people in the rural folks, they would like to try it out first. So try it out first by offering services, utility payments. They can pay their Meralco through a 7-Eleven, which is part of your agent. Again, when we define agent, we're not particularly saying about people because that's the connotation. It's about the people. Mail, we cannot do that because, again, BSP regulations, you cannot travel with the cash with you. But we have redefined already agent banking. It's not just about the people. The people can be your sub-agent, but we are talking about SMEs, stores, outlet, the Julie's bakery shop, the Lydia's Lechon shop, which they have their own till. They are merchants in the perspective. But for us, merchant or agent can have a very thin line. Later on, I'll show you that. So right now, what we have done in the different regions, we allow the financial institution to expose their services to the rural folks through an agent, whether it's a stall, sari-sari store, or a fuel station can also be an agent. We call them super agents or agent aggregator. No, okay. So expose that, and then once our people from the rural folks get the hang of it, because they don't need an account to pay their bills, the agent will be providing that facility to them through whatever medium we decide with your bank. That's how we do things. And then that's the time that we can now, okay, I'm really experiencing this one and it's really working. That's the time we can go to step 2, customer acquiring, which is the end goal of financial inclusion. So that's how we have worked with all the banks that we have dealt with in Africa and in the other regions. And together with that one, of course, the bank needs to have the power to control the management of it, to have proper hierarchy, because region per region, they have different approaches. There will be places that you can just go to a co-op and then let them handle the agency banking for your bank. Or there will be places that you need the likes of 7-Eleven, but the 7-Eleven can be the mother branch for sub-agents. So we allow our clients to create their own structures so that it is custom built for the need of their locality. So that's what we have provided to our customers. Now, there's a very fine line between a merchant and an agent in our perspective. Yes, a merchant will be focused on selling, so we do have a complete POS system for that. Like, so whether it's a simple smartphone connected to a Bluetooth printer or the advanced POS devices, fine, we can work on that one as well. But at the end of the day, it's all about services. It's all about what you have at the back that you want to expose in the digital realm. So therefore, we are giving the same capability, depending on the bank, depending on the policy, depending on how you onboard merchants. You can board merchants. You can onboard agents and vice versa. I can be an agent, then later on I decide to have my own business. I decide to have my own coffee shop, or I decide to have my own internet cafe. So I can quickly onboard myself by going to a super agent instead of me going to the bank itself to open, okay, I want to be a merchant that is tied up within the ecosystem so that your customer can come to me and then use their wallet or do the payments, do the transactions through my shop. So therefore, we give that capability now to both agent and merchant depending on how the bank will structure it. So one of the business case that, okay, you are paying 7-Eleven, then suddenly you have a 100 pesos change. The teller of the 7-Eleven can actually offer you, sir, by the way, do you want to open a wallet account with that so that you can also utilize other payment system that we might be offering in the future or we currently have. So those kind of business scenarios and use cases are already overlapping. That's why when we present agent banking, we are saying merchant and agent banking at the same time. So if you look at the complete ecosystem, this is how we have done it in Kenya, in Zambia, Lesotho, even in Bhutan, and even the other regions in Africa itself. So it all starts with client transactions. They don't have to have an account. That will always be the challenge. So to entice them. Then later on, when they get the hang of it, hopefully we'll get them onboarded, whether they become a client of the bank or later on they become an agent as well, a customer. The usual cycle, they become a customer, then they become an agent, then later on they had improvement in their lives, they become a merchant as well. That is the end goal. Not only for them to be financially included, but also for them to have improvements in their lives. That's why they said doing agent banking is not for the faint of heart, and you must also have a heart. It's not just about income. It's not that will come after. So if your banking institution is really aligned with that mandate, then definitely agent banking is one of the medium that can help you out aside from what we currently have. Okay. So another thing. So just a quick recap on just a quick sharing on what else can you do with agent banking. It is really beyond, or it is according to the mandate of the bank, to what you can do, what you have at the back end, what we can expose. So in the likes of Africa, they started, of course, we know this already, government pension using agent, either the agent or cash points or the super agent, the likes of 7-Eleven, you can get your pensions there. Remittances to non-customers. So sample, I want to send money to Bicol to my relatives there. So I can go to an agent, transfer it there, then they don't have to have an account. So using the ways that we encrypt things, the ways we do tokenization, security alignment in digitalization, we are able to do it. Cebuano Lulier and then the likes of them have already done it already. So they know how it works, and it's just a matter of we keep on telling the banks, you are the mandated financial institution, you have the capability and power to do so. Not like them that are non-banking institution, they have to apply for a permit, they have to take all of this just to be able to offer services. So it's the other way around. They were able to reach out the unbanked without them having a proper banking institution, but you have the banking institution to be able to do this. And we are now seeing the big boys there are doing it already, and we are happy that that's already happening. So again, you can extend it to loan application, getting of loans, because we have some policies in BSP that what an agent can do, what an agent cannot do. But at least at the end of the day, you can get applications, whether it's a straight-through processing, whether it has to go to the backend for approval, doesn't really matter. It can all be done. So up to the point of bill payments, school payments, all of those things is all part of the system that can be done through digital banking or whether mobile banking, internet banking, and even on our agent banking system. And then there's also some accompaniment benefits for the agent. So aside from their reaping fees and commissions, they can also be encouraged to become SMEs now by you allowing them, according to the performance and according to the metrics, to give them some microloans or loans so that they can start their own business. And at the end of the day, if you see it all, those small merchants that are grouped together or agents that are grouped together, they now become a business for the bank as well. They now become an SME. So as Ronald showed out a while ago, the small amounts there, if you put them together, actually can even surpass the biggest loan. And come to think of it, when you do loans in the rural folks, they try to preserve their names, right? So surely, if you allow them to have a 7 days, we call it microloan, 7 days, 14 days loans, and then they usually they really pay for it compared to you're lending a big amount of money in the metro, but well, we all know what happened there. So the chances of a rural folks to pay and the chances to get payment in the metro, you have more chances that they are going to pay because they are taking care of their reputations and things like that. Those dynamics you cannot neglect. They may say, "Oh, well, that's too on the soft side." No, no, no. You're trying to reach out to them, and you have to get your foot in the door by allowing your businesses to have the soft side of things, so that they can be included. If that's the end goal for them to be included, no. So again, these are the things that we have done, and we also have tried to implement things like you can easily onboard merchant. If I'm going to start my business, I go to an agent. Hey, I want to be part of of your ecosystem because I have a small business and I want your customers to come to me. So you go to the agent, they can onboard you. Very like KYC. Or if you want to have a selling KYC, yes, we can have a checkpoint in the bank or in the branch or in another bigger agent aggregator. That can also be done. Okay. So this was tackled also by Ronald. Yes, the things that we need to provide to our clients for them to really flex it out, explore the things on what are the different structures that I can put on fees, if I can do some commissions as well, if I can do some tiering, if I can do transaction volume, what have you. So we are giving that flexibility to all the clients that we have so that they can play their cards right according to the regions and localities that they are in. So for per region, it has a different formula. That's based on our experience, no? And then, of course, just want to say that just to flash, like in Kenya, Equity Bank, where Ronald came in, right now as we speak, they have 71,000 agents. So I was watching a local show, when they featured Land Bank there because they are really into the agent banking. As you can see, the number of agents that Land Bank has right now, if you go to their website, is far from what Equity Bank has. 71,000 agents, combination of persons, stalls, and things like that. And yet, they are still not able to reach the entirety of the region. So the potential is still there. So the likes of Sudan, who's just starting up with 4,000 agents, and also the likes of Bank of Bhutan that started about 2 years ago. Now they have around 500 plus agents. So these things are really possible. So it's really not a question, oh, is it possible to do that? Is there really a market? Yes, there's a market. But at the end of the day, BSP is telling us about the mandate, ADB and even World Bank, the mandate for financial inclusion, not just to have a business, but rather to reach them, help them out, and then later on, at the end of the day, everybody will be winning at this stage, especially in the past 2 years. If we were able to just put in place almost all the entities have the proper number of agents, then we could have served them better. But come to think of it, with the current facilities that we have, combine all the banks, combine all the payments, we had a growth of almost 5,000 times for the payments. What we're pertaining to is that people are now using Grab for digital payments. So if you go to a Jollibee nowadays during the pandemic, you see so many Grab drivers there. And come to the how the people pay them, most of them are already using the wallet, using InstaPay, using whatever network we have. So therefore, it is more feasible and viable to do agent banking in the Philippines right now. Okay, so just a few more slides. So just again, just to introduce us, we are Modfin, and we can check. You can check our company. We belong to now to the top 5 vendors there in providing digital platform. And again, we are able to serve Kenya on the very first 10 years of our career, and you can see our records there, and Ronald will be a testimony for that as well. So we know what we're doing, and we came from that market and bring it to the likes of Asia. There will be one formula or two formula that can fit our market. So we have a couple of offices, 8 countries presence. We have around 65 platform. Majority of them are in Africa and in the Middle East. So 10 years of journey, 93,000 agents running on the system. We have 34,000 merchants as well that can double up as an agent. We are serving around 33 million plus customers running on the system. No? But what we are happy to say and share is that we were the first to help out the bank in Africa to do the first omni-channel there, the first agency banking. When in the Philippines, we're still thinking about how to do this. They were already doing it, and we were part of that history in Africa. So all of this has been possible because of what we have in the solution. So we just simply augment what you have. This is always the question of smaller banks. How can we do it? Do we need to change and revamp the entire backend? No, the answer for us is no. So if you want to discuss further on that one after this presentation, we will give you our contact numbers and we can discuss again. We're just tackling one portion of what we have done in the digital space, and that is agent banking. So again, thank you very much for the time. I hope I was able to share and encourage our financial institutions that are still thinking if they want to do this or if they can really do this. The answer is really yes. We just have to sit down, try, look on what you currently have, and see the best formula that can work for you. Thank you very much, Janet. Thank you for this time.
Thank you. May I invite Romel and Ronald to kindly turn on their cameras so that we can answer some of the questions from our participants. So maybe we can use this as an opportunity to discuss this topic further. And I think we have some questions here that we haven't answered yet, but I think for because of limited time, what is the step? Like, can any bank implement agency banking? Romel, what's your take on that? I mean, can any bank in the Philippines just offer agency banking, or are there steps that have to be followed?
There, definitely there are steps that have to be followed. And actually, in the starting point of my slide, if I just quickly go through that one, BSP have already laid out the foundation, the frameworks, and the guidelines. So actually, you just go to the BSP circular. And the good thing about the BSP circular, it's well phrased that you don't have to be a lawyer just to interpret it. You as a common person, and of course, if you are already in the banking institution, can directly interpret what is being said there. So there are guidelines on how to do so. And there are, sorry for that one, let me just go back. So these are the four main drivers of or circulars that our rural banks or even other financial institutions can check. So like Circle 940 is allowing the bank to have cash agents, but there will be some strict rules there in terms of transporting of money. That's why now having to combine that with Circular 649 to introduce wallet, whether it's on your own wallet or we ride with the current wallet that's already available in the system, you can still augment it and still proceed with an agency banking. So the best way to really start this one is that you have the right network. You have enough friends in the market, enough contacts that you can tie up with them, because it is best implemented if you have the likes of shops, stores, and SMEs to be your starting point as a super agent before you dwell with individuals. So you try it out there. Of course, you have enough security for the cash. You don't have to bother about the cash flow and things like that because they have their own process as well. That's how we see it on how we can adapt it within our country. But Ronald can give or some share some thoughts in how it was done in Kenya, because Kenya and the Philippines right now in terms of this endeavor will almost have the same footmark.
Yeah, Kenya was a little bit of an exception in that as we were rolling out the very first agent services and wallet services, we were ahead of the global framework for regulations. And the regulator in Kenya, the Central Bank of Kenya, kind of said to the organizations, right, we'll oversee this, we'll watch it, and jointly we will then draft the regulations to cover it. And so the regulations covering cash agents, agent services, the regulations covering mobile money emerged a little bit after the fact that we were out live in the market. In all other markets now, those regulations pretty much exist already. The key thing that any regulator is looking at is ensuring that the consumer's money is protected, and making sure that money laundering and issues like that don't become a problem. And as I said, mainly protecting depositors' funds. In the case of agents, it's a very well understood model now that agents taking deposits, taking cash from customers on a deposit basis, that money is already securitized. An agent puts a deposit with the bank to cover the amount of deposits he can then take from customers. And so Modfin platform has an excellent float system, a balancing mechanism where every time money comes into an agent, an account gets decremented for that agent. When that balance gets to zero, when that float balance gets to zero, they can't take any more cash in. Every time they give cash out or take a merchant payment, that balance goes up. So it self-balances. And in some markets, we've worked to even help that balancing happen across different agents or different merchant locations. Because typically what happens is in the cities, folk are earning money. They walk into agents, they deposit cash, and they would then send that money home if I just look at the remittance services that occur. And in the rural areas, the flow is generally outward. And so you find your agents are short of cash, whereas in the cities, they frequently have too much cash. And so there's very, very good tactics. And quite a lot of the work that I do is helping agent networks work out how to balance those issues. And there's some excellent tactics using cash runners, doing different transaction types to help smooth out and balance that. The Modfin system also supports for agent aggregators. So these are like super agents, and they manage the cash liquidity across smaller agents and provide liquidity funding. So when the small agent over there has run out of cash, he gets a loan from his super agent, who actually benefits in the revenue share from the commissions earned for these transactions. So it's a very sophisticated system and has been well proven on millions of agents around the world.
Thank you for that, Ronald. So actually, the same thing that you were sharing about the float and things like that. Actually, few years back, when we have the so-called GCash and Smart here, they are EMIs or electronic money. In that sense, we already know how it works and things like that. That let's say even if I used to have a computer shop, and then what my wife did is that we opened a Smart Padala. So therefore, whatever balance I have there is the only is what I can deal with. It's what I can transact. So if somebody comes in to so my wallet decreases. So the cash is already with me. So there's really no point of you transferring the cash, which is included in Circular 940, that you have to ensure the security of that cash because it's my money as well. So if I go for a doorstep banking, yes, we have the so-called doorstep banking, wherein we capitalize the GPS location, and then the system analyzes who is the nearest agent to the locality of the person requesting for a home service, especially during pandemic. Then when you go there and your agent structure is working on a float or working in the perspective of electronic money, therefore it's your money. It's nothing need to be safeguarded. It's your money. So you're taking the money, your wallet being decreased or what have you, compared to a structure that you're using a CASA or virtual account or credit line. But all of those combinations we have done in Africa. And it can work. There's no one fits all. It depends on the mandate, direction, and regulations of the region.
Just a comment. We've been using this term account and wallet quite a lot through the presentations, and different banks take different approaches to this. At Equity Bank, we decided not to have a separate wallet. We used the debit account already on our banking system as the value store for all of our customers. Other banks, perhaps because of the licensing restrictions and the cost that they face with their core banking systems, they choose to open wallets, basically separate account types on the Modfin platform for these lower end, lower value and poorer customers, which have smaller amounts in those wallets. And then as those customers do more and more, and they need to hold more money, they might then open a traditional debit account in the core banking system for that customer. They still get the same services, and the Modfin platform can deal with a CASA account, a current or savings account, or a wallet in exactly the same way. It's agnostic as to the value store. I more and more use that term value store because it's irrelevant to a customer whether his money's in a wallet or in a bank account. He's interested in what he can do with that money.
Exactly.
Okay, thank you very much, Romel and Ronald, for this very exciting topic. We very much appreciate the insights that you have shared to us. And of course, if you want to learn more about Modfin's initiative, you can contact them directly or through their website. Romel and Ronald will be answering also your questions in the chat box. I noticed, Romel, you have to review some of the questions there. I'm sure that
Yeah, no
there's more
worries.
information that can be added on this topic. So thank you very much to our
Thank you as well.
speakers. And then